Hey, welcome back to the Hub channel today. My name is Brandon and I have Jeff Beamer here with me today. He is a professional money manager and our senior strategist over at EWO Trader. Jeff, oh my gosh, this last week has been absolutely stunning for you. You gave us 3 killer trades, every single one of them hit. And I know we're going to be talking about that later in the show today, but what is going on with the US market right now? Holy cow.
Well, we've rallied up a little bit on the broader market, and
Yeah.
we've reached what I call an intermediate pivot. You're looking at a chart of the Spider Index Trust right here, and back here at the beginning of August, we have a what we call a major pivot. We moved ourselves down, and now we've rallied up and made a lower high. This lower high is what we call an intermediate pivot, and if we do move down and continue to move down, what I want to show or what I want to do is I will typically give myself a little white space over here to the right, and I'm going to set a target. And how I set this target is with a tool that I have in my arsenal here called a triangle or a zigzag extension. Now, when you do tools like this, you can either go from highs to lows or from close to close. All right. I go from close to close. So I'll take the high close, come down here to the low close, back up to the high close. Okay. And then that sets my targets. All right. Now, as long as you're consistent, and the reason I use closes or closing prices is that that's really all that matters. Market opens do not matter. Highs and lows do not matter. It is where you close. So I stick to using closes a majority of the time. And interestingly enough, when we started this initial move down back in early August, I had a target of 430 on the Spider Index Trust, a near term target on the Spider Index Trust of 430. We got down to 434, okay, right around here, not quite hitting my target before we rallied back up. Well, this pattern is showing that we could possibly retest that target here in the next week or so. And interestingly enough, when I drew that zigzag pattern out, look where the 100% extension is. It's right at that 430 target. Now, does that mean that we're going to go to 430 on the Spider Index Trust? No, but it's my target. I have a trade that already is out there and is targeting that number. And we'll see if this time we do get all the way down there. Okay. Otherwise, if I want to look at hey, and have an attitude of, hey, we're still bullish, and I decide that I'm going to draw a line in the sand, like say, just draw a trend line, I could take, and here I'll just take some highs and lows. In this case, I'll take some lows and just draw a line and say, hey, as long as we stay above my trend line or my moving average or whatever, I think this market's going to go up. If that is what your opinion is, then what's your target? And I think a good target for that is going to be 460. That would be the first one in the near term. Okay. But with this intermediate pivot, I'm betting that, and I bet we cross this line in the sand and we do move a little lower. And if not, then I will look once we cross this intermediate high, then we'll go back bullish. It's almost like a straddle, which we've been talking about for weeks now. Okay. Making a decision. If it goes up, where's it going to go? If it goes down, where's it going to go? So really quickly, let's take a look at the NASDAQ, the Qs. Not much of a move today. It was down just a little bit, down 88 basis points. Not much, but it is forming that intermediate pivot that I was talking about on the broader index trust. Same kind of thing. If you feel the market's going to go down, set a target. If you think the market's going to go up, set a target and kind of stick with it until, as they say, the trend is your friend until the end. All right. Now, on the small caps, IWM is our benchmark for the small caps. We were down 35 basis points today. Not much of a move. but it was still a red day. Now, this is, we'll see how the week plays out. There's lots of news coming out in the cycle regarding inflation and interest rates. And let's talk about those for a moment, Brandon. We're going to talk about interest rates for a moment. And, maybe we have a chart of that inverted yield curve that we can pull up and see the where the Fed is looking. Now, in the past, I've showed the 10-2, meaning the 10-year and 2-year yield curve, but I wanted to start showing what the Federal Reserve looks at, and they look at a 3-month versus the 10-year. Now, when you look at the 3-month versus the 10-year, you can see that we're still well below 100 basis points to the negative, meaning the 3-month T-bill is earning a lot more than the 10-year bond. Okay, and that's a problem. All right, so with this inversion, what we're looking at is interest rates rising. All right, and specifically when we look at the bond ETFs, and coming back to my chart, we'll pull up TLT, which is the long end of the curve. Okay, that's the 20-year plus ETFs. You can see that that has been trending down for some time. All right. This means interest rates are moving higher. Okay, that's in that inverted relationship. Now, if you see here in the past couple of days, this sharp move down, and compare that to the short end of the curve, that would be the ETF SHY. This is the 1 to 3 year Treasury bond ETF, what we call the short end of the curve. You can see a much bigger move to the downside, which means interest rates in the near term are shooting higher. And that is what's caused the market to, according to the talking heads out there, that's what has caused the market to start to retrace a little bit. They're fearful of higher interest rates and fearful from a rising rate of inflation. Now, it's been interesting with a few headlines that's gone by lately, what this does to various sectors. And one news article caught my attention yesterday, and that was essentially on the home builders, that the builder stocks are falling, blame the 10-year Treasury yield. Well, I got to thinking, what is the reasoning behind this? And I kind of created a what they call a Ben Franklin method. What are the pros and cons, and kind of measure them up and see what, if you're a believer in that or not. So some of the pros for the home builders, for the sector, and what I mean by that is as a group, is that homeowners, really 82% of homeowners in the United States have an interest rate under 5%. Okay, there are very few existing owners of existing homes to sell their homes because they would be forced into a higher rate. These bullet points are good news for home builders. Okay, builders like Toll Brothers or Pulte and others, and we'll take a look at those in a moment. So these are some of the good news bullet points for home builders. Conversely, there's some bad news for home builders. All right, and those deals with the rising cost of material, rising cost of labor, and incentives that these home builders have to offer to prospective clients. They will either buy down the interest rate, or they will pay off closing costs, various methods like that. That will cut into their margins. All right. So looking at the home builders, let's take a look at the sector on its, as a whole. That would be XHB. And you can see that yesterday, this sector took it on the chin. I mean, it was a pretty hard day for the home builders as a whole. Today, there was a little recovery. It moved up about 49 basis points, but it's really the individual homeowners. I mentioned Toll Brothers a moment ago. Big day down yesterday, big recovery today, although it only moved up half of yesterday's losses. But Toll Brothers was up 2.65. DHI, which is DR Horton. All right, big down day yesterday, small move today, up 1.22%. But as you can see, it barely got back to where it was a couple of days ago. Then you have Lennar, LEN, same kind of thing. So these home builders, last one I'll show you is Pulte, the Pulte Group. All these guys, Pulte's been on a nice little run, and it's been interesting to compare. Pulte is on one end of the spectrum regarding the home builders, and Toll Brothers is on the other. Toll Brothers, TOL, they make a large custom homes. Pulte is on the lower end of the curve, more kind of tract housing. And so they could react differently to this market. So, it's news articles like that that can draw your attention. And the bottom line is we don't really know how the home builders will react to these different challenges out there. But the builders are in a good position that the inventory of existing homes is at the lowest rate that it's been in 30 years. And the home builders are in a position to really benefit as long as their margins aren't hurt too much. So that's kind of a bullish. I would give the edge to the bulls on the home builders, but we'll see. And that kind of is the sector that we wanted to focus on this week because of all this news coming about with the interest rates and how fast they're moving, because they are moving fast, Brandon.
Yeah,
man,
that's a great sector to look at, only because so much news, and you saw the market drop today just because of the fear that we see in the streets for the increased interest rates, and then inflation's a little bit higher already than everybody wanted it to be and stuff like that. So this is going to be a good sector to watch. Now, I know everybody's been waiting to see what happened with those trades that you did last week, Jeff. How did those turn out, and what kind of profit did we get just off what you recommended?
Well, those trades worked out actually really well. We had 3 trades that we gave out last week, and I wanted to highlight 2 of them here. In fact, I wanted to highlight the 2 that actually didn't make the most, just to show that, hey, we're doing really well. So we have 2 trades that really worked out. So we have first Sienna, and you can see what happened on the earnings event here. We have a stock that was trading sideways for a while. We put a straddle on this stock just before the earnings announcement, and then pop. We got the big move going into earnings, and this, as you can see, made approximately generated an 87% return on risk in literally 2 days. I think that's all we were in this trade was for 2 days, an 87% return on investment. And the other stock that we showed last week was DG, Dollar General. And we have closed out of this trade, but I'm just showing you that after the earnings event, 2 days later, okay, we had the earnings event, the stock gapped down, dropped down big, and then the bears moved in and they're sending this stock lower. This stock, we could have made upwards of 123% return in literally, I think about 4 days. Is 4 or 5 days we've been in this trade, generating 123% return. And the last one, which I wasn't going to show you, but that's PDD. You can pull it up on your own. That was our big winner last week. And what a move that stock made. So our earning strategies have been working out tremendously well. And so each week we've been focusing on a new stock. This week we have let's pull up the Wall Street Bets target of what stocks are declaring earnings this week. We're midweek now, but we still have a few earnings to go. And a couple that I'm watching are DocuSign, which is after the close tomorrow, and Kroger Friday morning. But the one that I really am focused on is that DocuSign earning. All right. So let me pull up the chart here on DocuSign and just kind of give you an idea of what we're looking at here. All right. So pulling up DocuSign here. And the stock, well, it's already made. We had a little bit of consolidation down here a few days ago. That may have been the ideal place to enter, but the fact that we have this little bitty candle today, I'm thinking that we might get a pop on DocuSign after the earnings event tomorrow. So we would be looking at possibly taking this trade off on Friday at the earliest. Don't think I would keep it through the weekend, but really the move is what's going to have us make that decision. So even though the stock has already moved going into earnings, we would still probably put a straddle on DocuSign. DOCU is the symbol, and that would really be only a couple of day trade. Now, by being a part of our of our alerts, sorry, we will show you the exact strikes to use, the exact expiration to use. That's what our members get each and every week. In fact, if you want to learn more about how to trade this strategy, I have a free document that you can download showing you how I find these, how you can find these stocks that are set up to move each and every week. So download that now, take a look at it. Each and every week we're here giving new ideas, watching the markets, and so far we've been hitting on all cylinders. So Brandon, that's really about it.
I mean, Jeff, you absolutely crushed it this last week, and that DocuSign looks really interesting, and especially the fact that it's just a short earnings play. You're looking to get out of that thing by Friday, you said, possibly. So this is going to be one of those quick turnaround plays. And I know that you guys give all of your signals and everything, including all the details of each leg of each trade that you get in and out of in your service over there. So guys, be sure to sign up. Go ahead and download this guide. I'm going to put the link in the description for this video. The link is also on the screen. Go ahead and download this guide here. But Jeff, thank you so much for dropping by the video again this week. We enjoyed your insight, your trades as always, and everything that you had to share. And again, thank you guys so much for dropping by this video, and we will see you next week here at the Hub channel. Goodbye.